Good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN Weekly for Saturday, September 18th, 2021. And our top story today, we're going to take a look at retirement plans and potential tax changes. Joining me now to discuss this and a lot more is Austin Ramsey, a journalist with Bloomberg Law. Austin, great to see you again. Thanks so much for joining us on the program this morning.
Thanks so much, Jeffrey. Always a pleasure.
All right, let's talk about this infrastructure bill. A lot happening. Ways and Means Committee, Senate Finance Committee, everyone's kind of moving this reconciliation bill along. There are some tax and retirement things in this package. What can you tell us?
That's right. Yeah. So as you noted, this is an infrastructure package, but we know that Democrats in the House have been, really broadening the definition of what that means, and this time around we're seeing, retirement in the crosshairs, but in a way, in a good way. At the end of the day, this proposal is aimed at increasing access to retirement, and the way that they're planning on doing that is kind of twofold. The first measure is what we in the industry kind of fondly refer to as an auto IRA proposal. So this is automatic individual retirement account. Basically, it's mandatory retirement savings at the workplace level. The House is recommending that they pass a measure here that would require basically all private sector employers to offer retirement. What that would look like is, like I said, an auto IRA. So any employer that has been in existence for more than 2 years and has more than 5 employees would be required to sign up for a base level IRA, and they would automatically sign up new employees. Anytime you have a new hire, they would automatically be signed up for this IRA, and they would automatically contribute 6% of their income into that, slowly increasing over time up to 10%. So the idea here is that, look, people aren't paying attention to all of the different things that they sign up for when they get a new job, and that hopefully, this will kind of coax particularly low-income individuals into saving for retirement for the first time ever. Look, the statistics here are clear. 33%, or about 1/3 of Americans, don't have anything saved up for retirement at all at this point. And roughly half of employers, particularly in the retail and service sectors of the economy, aren't providing these kinds of workplace retirement plans. But we know from the data that those are the kinds of plans that help people save for retirement the most.
Yeah, and Austin, just to kind of piggyback on this, so we know that I think it's like 60 to, depending on who you talk to, 60 to 70 million people don't have access to a workplace retirement plan. Now, how does this kind of fit in with Secure Act, which created PEPs, right? Pooled employer plans, and let's not forget our friends at the state level, because there are state auto IRA programs. I'm going to miss some here, but I'm thinking about Oregon, California, Illinois, Maryland, Vermont. If I forgot your state, I'm sorry, it wasn't on purpose.
That's okay. That's right. There's something like 13 states and cities at this point that have some type of auto IRA mandatory retirement proposal in place. And you're right, Secure Act from 2019. The industry is still reeling in some respects from the major changes that we saw there. Secure Act was all about helping make retirement savings easier at the employee level. They were trying to encourage retirement. They were really pushing the needle as close to kind of this mandatory retirement savings proposal that we're seeing now. Yes, pooled employer plans, multi-employer plans, groups of plans, different ways to ensure that bundled service providers are able to provide low-cost 401ks and low-cost IRAs. Yeah, look, in many respects, we don't even know how much the Secure Act is going to kind of shake up or revolutionize the industry. But I think that under a Democratic administration, and as Democrats have control of the House and Senate, they want to take advantage of that. And, no matter what, retirement savings tend to be a bipartisan initiative. this is a way to ensure that all Americans definitely at least have access to retirement when they don't already. And yes, as you said, auto IRAs. I think 3 states, California, Cal Saves in California, Oregon Saves in Oregon, and Illinois. Those are the 3 states that are up and running, and the data is clear on that as well. It's working. Now, there's one clear division between the state IRA programs and the federal program, and that is that the trust, essentially the person or entity that's holding the money in the state IRA programs, is the government itself. They are not helping employers set up IRAs. They are providing the IRAs themselves. So the state government essentially goes to employers and says, I want a roster of all of your employees because I have a big retirement plan and I'm going to sign your employees up for it. At the federal level, in this proposal that we're seeing here, the federal government is helping employers. They're giving them tax credits to help them set up the low-cost IRAs, or in some cases 401ks. But at the end of the day, the buck stops with the employer. They have to provide something, and the cost falls on them.
Yeah, and there's obviously a lot of details. I mean, when you pass legislation, you rely on regulation to create all the details, and that would probably fall, I guess, to the Department of Labor and EBSA, Employee Benefits Security Administration. Let's talk about, I think, a very important thing, Austin, cost. And obviously, there's a lot of talk. I was reading something recently around some of the tax incentives around exchange-traded funds perhaps going away. That's now a target of this bill, because you can't have people put money away, which has a cost to the government, without getting it from somewhere else. So there's all this kind of raising rates, all that kind of stuff. What can you tell us about that?
Yeah, look, you can think of costs in the retirement realm in 2 different ways, kind of the cost on the employee and the cost on the employer, as well as really the cost on the federal government as well. I mean, what we know about the proposal that the Ways and Means Committee has passed is that this would cost roughly $47 billion. Wait, I think I got that wrong. Yeah, wait, no. This would cost roughly $47 billion over about 10 years. That's a lot of money. And yes, they are proposing to kind of cover those costs by cracking down on the way that wealthy Americans use IRAs. A number of different ways here. So there's the elimination of the backdoor IRA, which essentially allows individuals who couldn't contribute to a Roth IRA to do so by first contributing to a normal IRA and then kind of transferring those contributions from an IRA, rolling them over into a Roth IRA. And then they would also prohibit individuals who have already $10 million saved up for retirement in an IRA or a Roth IRA from contributing anything extra, and they would mandate some pretty restrictive mandatory RMDs. Oh lordy, required minimum distributions. They would put some pretty strict required minimum distributions on individuals who already have $10 million saved up for retirement in those kinds of plans. The idea here is simple. IRAs, Roth IRAs, these are tax advantage plans that are meant to help low to moderate income savers ensure that they have a healthy and safe and good retirement. This is not intended to help multi-billionaires keep their money, evade the federal government from taxing their savings. Another kind of element to the savings side of this, or the money side of this, is a change on the spending side of the bill that Democrats have suggested for the savers credit. Now, the savers credit is kind of a little known part of the tax code that allows individuals to basically lower how much they ultimately have to give the Treasury on an annual basis if they're saving for retirement at all. But the important thing to note here is that this is not, under current law, it is not refundable. So you cannot get a check from the federal government, no matter what your tax liability is, if you're saving for retirement. Under the proposal that Richard Neal and Democrats in the House are putting forward here and have passed out of Ways and Means, it would make up to $500 of that saver's credit refundable. And that $500 could go directly into whatever IRA or whatever tax advantaged retirement savings plan that you have, presumably recently set up.
Yeah. Well, it's going to be interesting to watch this. It's all part of that kabuki dance that we call politics. Obviously, on this show, we stay away from politics, just report the facts. But really interesting concepts and need to get Americans saving more. Of course, they need to have discretionary income to do that as well. Austin Ramsey, it is always a pleasure to chat with you, my friend. Great to see you, and thanks for joining us this morning.
Thanks so much, Trevor.
Thanks, Austin. Great to see you. Thanks for sharing your perspective. And when we come back, we'll take a look at some of our best segments for the week. You're going to want to stay tuned right here on BRN Weekly. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. This week we spoke with Wall Street Journal contributor Bailey McCann on what you need to know about target date funds. Let's take a look.
Well, they are the default choice for a lot of investors who get into their company's 401k. And, if you're a low information investor, somebody who just signs up for all the defaults, you may not know that's what you're in, but they are basically designed to work for those people specifically and create kind of a set it and forget it portfolio that can deliver them to retirement. So, there are fees associated with these. They're going to be a little bit higher than just off-the-shelf index funds that are ultra low cost because they do come sort of pre-formed in a portfolio. You do get a measure of financial advice with them. So, that can also save you a little bit of money over the long term versus finding somebody on your own. And they do adjust over the life of the portfolio to sort of lead you to retirement and end out in a more conservative place. So during your prime earning years, that's also, your prime growth years. And then the closer that you get to retirement, those portfolios are going to get more conservative. It's not for the first time. They looked right after the financial crisis when these funds posted some pretty hefty losses. And what Congress is doing now is basically asking for an update to that look through and see if that is necessary. Just because of, as you said, the amount of assets that are in these funds, and trying to make sure that they're doing what they say they're doing on the tin, right? So they want to make sure that people aren't surprised by maybe being in riskier positions than they expected at retirement, or they aren't surprised by fees, or if they get under the hood and look at what's in these funds, they aren't going to be surprised about what's in there and find, suddenly riskier investments. There was a change. The Department of Labor opened the door to possibly including private equity in some of these funds in the future. Nobody's pulled the trigger on that yet. There are some providers that say that it can be done. And if that happens, then the fees are likely to go up. Private equity is typically more expensive than mutual funds, index funds, and less transparent, obviously, because we're talking about the private market. So those are going to raise some questions for Congress and also for fiduciaries to make sure that they're still sticking in line with their fiduciary requirements and their ERISA requirements. If you look at the disclosures around some of these funds, investors are told to expect a certain level of dynamic adjustment and rebalancing in response to market conditions or in response to things like ESG concerns. But, that could also potentially include the addition of private equity or the addition of allocations toward REITs or other asset classes that maybe aren't as straightforward for people as stocks and bonds.
And we also spoke with Rosalind Brown of Whippen and Angela Russell of CUNA Mutual Group about the upcoming Whippen National Summit on Diversity, Equity, and Inclusion. Let's take a look.
Well, one of the great things is we have a number of great sponsors. And so when we look at sponsorship across the Whippen network, we have companies that are doing great work in the diversity initiative. And we want to make sure that we're highlighting what they're doing, but also sharing, because we have large sponsors who have 50,000 employees and they have a huge HR team that's focused on diversity. They're doing a number of different efforts. And then we have organizations that are much smaller and they may not have the resources, although they still have the interest and the desire. So we want to make sure that we're providing tools that gets every employer at a baseline in terms of what's going to create an engaging and an accepting environment for people to come and bring their whole self to work, and then be able to really contribute to the industry, because our clients also reflect our population in terms of employees. And so the best way that we're going to be able to provide those services from a retirement perspective to all those people out there that also want to retire one day is to have a voice from all those different backgrounds as well. And so we're going to make sure that we're addressing a number of different topics from a baseline that every organization should have, so every voice is actually heard as well.
So Jeff, what I would say is we're really expecting to hear about diversity, equity, and inclusion. And as it stands today, currently, just from a status perspective for organizations, what's on their minds, right? With George Floyd incidents happening now here almost about a year and a half to 2 years ago, that really initiated many different initiatives across organizations when we think about DEI. But where were they before that? And now where are they going? And what's going to be sustainable? What really is most important to organizations across the industry, particularly financial services? Where does our rubber meet the road, right? Because people are looking for so much from us. Our clients have expectations. Corporate sustainability and all of our environmental, social, and governance is really driving a lot of what we're doing because it is the right thing to do. And then thirdly, I would say, really trying to understand where our employees are, what are their expectations to ensure that we're kind of putting our money where our mouths are. That we are doing the right thing for our organizations in terms of continuing to promote those cultural shifts, continuing to really understand and respect difference and where the transformational changes are going to take place. And then how can we really make sure that all of those voices are included at the table, are heard, and really part of helping organizations to move forward.
I think when we think about who's doing things, we also see a number of organizations who are putting out corporate statements. But like you said, there are actually organizations that are putting their money out there, and either they're hiring experienced personnel. And so, for example, Kuna had a great conversation with us, and they talked a lot about their corporate investing and how are they making those decisions. And are those decisions all maybe upward stream or downward streaming? So are we just looking at ways that we get people to maybe just out of poverty, or are we actually putting people to the point where they can truly thrive? And I think that's a big difference when we talk about diversity and what we think about helping other organizations. We have a great speaker that's coming from Franklin Covey that's going to talk about unconscious bias. And so we had a great sponsor, Prudential came in and did that sponsorship for us. But I think one of the big things there is when we look at bias, are we actually acknowledging that we all have it? Regardless of if it's good or bad, if you immediately look at something and you say, that's good, that's bad, that's something I want to connect with or I can relate to. I am particularly excited about one because we talk so much about it so often, and that's the imposter syndrome. And so sometimes people get in a role and you think, goodness gracious, are we, am I in a position that I'm not qualified for? But at the end of the day, sometimes you're set up to fail. And so not acknowledging that and making sure that we're putting the structure in. So Deetra Giles from Executive Prep will be highlighting that topic. And I think it helps organizations to say, are you helping people through the ranks? Which it's a bigger difference between, are you just promoting people or do you have a diverse crowd overall? Well, what are you actually doing as you're promoting, training, enabling people to actually be their best selves at work as well? So we have kind of the full gamut from Fidelity, from Ameritas, we have Cap Trust, we have so many great sponsors that are joining us. And then of course, they'll continue to join us on Thursday that afternoon for job fair. So we see organizations, and we definitely see a lot more people making career changes at this point. And a lot of times those changes are more of a culture change. So they're not even leaving organizations simply for pay, but definitely for a different culture. And so knowing which organizations have a culture that you can actually relate to and that you can feel home with, we're going to make sure that those organizations are available, and they'll be interviewing and we'll be helping people find their new job home.
That's definitely going to be our ask, right? For us to kind of discuss and be able to share where organizations are going on this journey. What does that look like? What's going to happen within the next year or 2 years? Whether that's going to be increased education and awareness, whether that's going to be continuing to partner with a lot of our corporate partnerships within the community to drive how we're supporting our communities, whether that's going to be going out and really thinking about where do we source, right? Where do we get our talent from? How do we bring in more diverse talent slates? And really, as Rosalind was suggesting, how do we ensure that we are developing our top talent of diverse pools within organizations and historically excluded groups, and ensuring that we're preparing them and creating warm talent pipelines for them to move into these senior level roles or to be board ready, as where so much of the focus is. So understanding what that looks like for different organizations, what those steps will be and how they're planning to get there will be one of the things that will be most beneficial for us to focus on and share collectively, so that hopefully we can support each other as we do through many of the organizations like NICSA or through ICI, and do a lot of the same things and not so often have to recreate the wheel, as long as the information, of course, is public, but making sure that we understand what's happening, with each other, where we're coming together. Because a lot of times we're recruiting from the same places, right? A lot of times we're showing up on the same conferences. So the more that we can come together and share and be strategic around how we can do this as an industry, the more successful that we're going to be overall.
So we're all used to the virtual world at this point in time. I think it's no stranger at this point in time through the Zoom type environment, but we'll have all of our employers placed in different rooms. So you'll be able to rotate throughout the rooms And if you have registered for the event, you can actually see some of the jobs that our employers will have available in advance. That'll give you a chance to have some one-on-one time with these recruiters. Some of our employers are sending multiple recruiters, so it is a great opportunity. We know that some recruiters specialize in one part of the business than another. So you'll have that one-on-one time to chat with them, to share your documentation. So if you want to share your resume and really come able to focus on the jobs that they have available today. So this is not a job fair where we're saying, oh, we'll just chat with them and if something comes available. No, there are jobs available today. So if you are in the market for a change, those change jobs are right there and available for you to be introduced to and move on over into the career that's going to better fit your lifestyle and the culture that you're looking for.
Well, for one thing, it's for sure, right? It takes a multiple open mindset, right? To really to be able to make that tango work. Let me start from the place of the employer first. I think that in this market where we have the great resignation underway and where there's also there's a sheer war on talent, right? To be able to really find the talent that is the most qualified and the talent that you need to do a lot of our work, which comes with some certain technical skill sets. We have to be open. We really have to be able to look at resumes and understand what is a person's background, what is their work ethic, get some character out of that, as well as looking at their qualifications, prior experience, which is really important. But if they're like a career changer, is it that the prior experience or the transferable skill from the prior experience? What is really most important? So I do think that for us to really be able to think about how we get the very best talent for what we're needing, because people right now who are looking for those roles, looking to make changes, they're very diligent. They're hardworking. Most times they have very high learning agility. They can learn quick, they can learn fast, and they can also change and flex as they need to. So I think we do have to be very open and think about how we're looking and evaluating these candidates and go a little bit deeper than the surface, which may be how we have done it more in the past to go very quickly. From a candidate perspective, I think candidates have to be able to sell themselves still very well in this new world. And it's because the world of the employer in terms of being able to go out and find the talent that they need, and with the talent bases being, a bit low on the number of people that you have available right now, for those that are out there, they're going to be showing their best selves, right? So doing the research around the company, making sure that those elevator speeches are very tight. Who are you? What do you have to bring to the table? And why are you the best person for the job, right? What are those kind of top 4 to 5 things that employers will really, really want to know from you that are going to give you the competitive advantage and leg up when it comes to looking for a job with their company? And then I would say the last thing around it is really showing up as being a flexible person, but a person who has, great personality, has a little bit of a sense of humor. Because in this pandemic, the one thing that we've learned is that we all have done a little bit of self-reflection, and we want to see people that are really human, right? We've learned how to have jobs with our children in the background, or interview if the dog's coming in, or whatever that looks like, right? So really being able to show that you can relate to people and be relatable, I think is going to be the thing that gives the candidate the edge out.
That wraps up this episode of BRN Weekly. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the information in retirement markets, technology, personal finance, so much more, check out today's edition of our daily newsletter, The Morning Pulse. We're back again tomorrow for BRN Sunday. I'll be joined by members of the media, financial services, and academia. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited, and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.